Hello, good afternoon. This is Adam Tuiaana with FCOJ-A Futures in Chicago, coming to you on Wednesday, April 17th, 2013. Wrapping up the soft commodities futures markets here this afternoon. We're going to stick strictly to cocoa today. We've had the grindings, the European grinding totals come out basically overnight, and they were pretty much neutral. They were within expectations. The estimates were anywhere between 1% to 5%, so they came in at 3.9% decline from last year, so pretty much right in line. No really big news and no really big moves taking place off of that. Cocoa is last trading in the May contract down about 15 ticks, so pretty much even on the day. Last trading at $22.79, so that's $2,279 per metric ton. So why this is so important in the European grinding totals is basically it tells us what the demand is for chocolate, and of course the Eurozone happens to be one of the world's main regions for chocolate consumption, so it gives us a good barometer of what the demand is out there. And really the demand is kind of bearish, basically due to some Eurozone issues that are still ongoing. So that being said, when we take a look at the chart, and what's happening is we're still trading above. Last time I spoke of, and I showed you this chart, this is a daily chart of cocoa. And as we can see, since basically December of 2012, the cocoa market has been on a steady downtrend. So what we've been monitoring right here is this area, this head and shoulders pattern, which it looks like a head and shoulders pattern, left shoulder, head, right shoulder right here. And here's the neckline right here, which has been broken to the upside. We talked about that 2200 level. This is right here at the neckline, 2200. This area has been broken. You can see we're pretty comfortably trading above that 2200 area. So that's the thing to monitor. Another technical indicator that you want to take a look at is right here in the momentum. As the price action has been moving higher, the momentum has also been trending upward too. So if the momentum was going down while the price action is going higher, we call that bearish divergence in momentum. We're not seeing it here, so it probably shows us that, as well as the increase in volume once it broke this shoulder line right here, could basically precipitate more buying to come. So if this pattern holds and we measure the tip of the head right here to the neckline, projected upwards, it gives us a measuring objective somewhere in the area of 2350. So we'll keep a close eye on that. We are holding support over that 2200 area, so that in and of itself, with bearish news on this grinding report, is in fact, I believe, neutral to bullish right now. So if you're in the May contract, the volume, open interest is starting to dive out of that, so you want to make sure that you roll into the July contract, which is where you should be looking at cocoa. So overall, I'd say that I'm neutral to bullish. If I'm bullish, I'm a little conservatively bullish. So consider some call spreads or something that's a little more slow moving. Give yourself some time while managing the risk. On the upside, 2260, that area, I'm sorry, just say 23 is going to be our next upside resistance near term. On the downside, 2200, that neckline is going to be our support. Once again, this is Adam with FCOJ-A Futures in Chicago. Please keep in mind that there is substantial risk associated with trading futures and options on futures. That being said, have a wonderful afternoon. Thank you.